Today we're breaking down the latest moves in one of crypto's most controversial and closely watched tokens, XRP. Over the last 24 hours, the price of XRP has popped by about 4.24%, marking a notable uptick for an asset that's been grinding sideways under mixed sentiment. But this isn't just another short-lived bounce. There's a deeper story underneath, involving institutional demand from ETFs, oversold technical signals, market structure, and investor psychology. The question on everyone's mind is simple. Can this rally sustain and even evolve into a new uptrend? Or is this just another bear market blip before renewed downside pressure? We're going to unpack that in detail, breaking down everything from institutional cash flows to technical indicators, real-world utility, and key resistance levels that could define XRP's next chapter. To set the stage, let's look at what just happened. According to Traders Union, XRP is trading higher today, pushing past $1.40 and marking gains of just over 4% in the session. A move that comes despite ongoing technical pressure across short, medium, and long-term moving averages. In simple terms, XRP is still below its 20-day, 50-day, and 200-day moving averages, which means sellers have dominated price action for a while and are not yet fully beaten back. Technically, this tells us that while the day's gain is real, the broader trend hasn't fundamentally flipped yet. The token still hasn't pierced through significant resistance overhead, and chart studies suggest continued selling pressure until proven otherwise. So if the trend is still bearish or neutral structurally, what's driving this bounce? One of the most prominent catalysts right now is demand from XRP spot exchange-traded funds, a relatively new phenomenon in crypto. Large inflows into ETF products have been one of the standout macro stories of the past few months. Data shows that XRP ETF inflows hit 10.8 million tokens in just 2 days, extending a streak of net inflows and signaling that institutional appetite isn't just alive. It's consistent, even in a market otherwise dominated by sideways movement or risk-off sentiment. ETF demand matters because, unlike speculative trading on exchanges, institutional inflows into regulated products typically remove coins from open market circulation. When ETFs accumulate XRP, they hold that XRP in custody, often reducing the effective liquid supply available to traders. Over time, this supply compression can create scarcity, which historically is a bullish condition for price if demand stays steady or grows. That's the simple economics behind why ETF accumulation often gets traders excited. But here's an important reality check. Even with this ETF interest, total XRP held in these products is still less than 1% of total circulating supply. So we're not yet in a regime where institutional custody is starving retail liquidity. Beyond ETF flows, analysts have pointed to the fact that XRP has been oversold on several key technical indicators, particularly on oscillators like the stochastic RSI. Oversold readings, when an asset's price has declined faster than usual and the indicator bottoms out, can signal a short-term bounce or recovery as traders come in to buy what they perceive as a discount. In fact, some technical studies show that XRP's oversold conditions are approaching extremes not often seen in typical market cycles. Oversold conditions don't guarantee a rally, but they do mean there's a higher probability of a rebound attempt, especially if catalysts, like ETF activity or broader market stabilization, align with that technical backdrop. So now we've covered why the price might be moving up, ETF demand, and oversold technical signals. But what could prevent this rally from turning into something bigger? For starters, key resistance levels lie ahead. The short-term moving averages that traders watch, like the 50-day and 200-day, act as magnets for price and are often areas where selling interest resurfaces. If XRP fails to break above these zones, any bounce could be capped or reversed. That's exactly what analysts mean when they say the probability of a breakout remains low until these levels are convincingly overtaken. And the bigger picture isn't universally bullish either. Some major institutions have been trimming their expectations for XRP's near-term upside. For example, in a recent update, a top global bank cut its year-end XRP price target by roughly 65%, pointing to broad crypto weakness and slower than expected ETF momentum. That tells us two things. Even well-known bullish drivers can be tempered by wider market dynamics, and institutional forecasts aren't a one-way street. Let's talk about the current mixed sentiment, because this is where the narrative becomes actually interesting. On one hand, institutional interest and ETF flows are building a structural base for potential upside. On the other hand, everyday traders are watching price action that still looks corrective or bearish at a technical glance. This tension creates a kind of market tug-of-war. Some players expect volatility and a possible breakout driven by fundamental demand, while others are wary of further downside because the broader crypto market has been relatively risk-off in recent months. It's also worth noting that XRP's real-world utility, particularly its use cases in cross-border payments and liquidity solutions, continues to grow independently of price. Recent data shows Ripple, the company closely associated with XRP, processed tens of billions in cross-border transactions, highlighting usage that isn't fully reflected in price action. That dynamic is important because when an asset's utility grows faster than its price, it can act as a lead indicator for longer-term adoption and value capture. But it's rarely enough to spark a sustained rally by itself without accompanying financial demand. Now let's zoom out a bit and consider longer-term projections. Multiple AI forecasting models, including versions of ChatGPT and other machine learning tools, have been tasked with estimating where XRP could land by the end of 2026 under various scenarios. The consensus range is broad, reflecting uncertainty. Under baseline conditions, slow but steady ETF inflows and stable macro markets, models put XRP somewhere in the mid-single digits, perhaps roughly 3 to 4 times its current levels. With more aggressive institutional demand and rapid ETF accumulation, some models project up towards $6 to $8 or even double-digit territory. But these are conditional, not guaranteed scenarios. If macro pressures increase or Bitcoin and other major cryptocurrencies re-enter bearish phases, XRP can easily be dragged back into stagnation or decline. In that light, the recent rally of 4% is impressive but not yet a definitive trend reversal. So where does that leave traders and investors right now? If you're a short-term trader, today's price action is a wake-up call to respect volatility and position sizing. ETF flows and oversold signals give reason for optimism, but price is still beneath major trend-defining resistance levels. If you're a longer-term investor, this period is all about context and convergence, watching how ETF adoption unfolds, how total institutional inflows stack up over time, and how macro conditions evolve. One critical threshold many analysts are watching is how sustained ETF demand becomes. A few quiet days of inflows build confidence. Weeks and months of consistent accumulation, especially if exchange balances shrink in parallel, could mark something bigger. Conversely, if ETF appetite fizzles or macro headwinds intensify, any bounce might quickly fizzle out. And here's something to think about. Market psychology matters just as much as technicals and fundamentals. When traders are fearful or uncertain, price tends to stagnate. When sentiment shifts toward even cautious optimism, volume can expand rapidly and create self-reinforcing momentum. Right now, sentiment around XRP is mixed. A cocktail of cautious bulls, skeptical technicians, and institutional players quietly positioning. That blend makes for high potential but also high uncertainty. So what's the bottom line? Yes, ETF demand and oversold signals can sustain upside for XRP. They do create fertile ground for rebounds and even trend changes. But the market hasn't proven that this is the start of a new bullish cycle. That proof will come only if price clears the big resistance levels above, and if institutional demand continues to grow as a structural force, not just a short-term appetite spike. Now I want to hear what you think. Do you believe the ETF demand we're seeing right now is strong enough to power a lasting breakout? Or are we looking at another temporary bounce inside a broader downtrend? Drop your thoughts in the comments, be specific, be bold, and let's get a real conversation going about where XRP goes next.